Good morning, good afternoon. Happy New Year. This is Coach Mike back again for 2025. Actually, we're 1 week into the new year. Today's the 9th, and I'm sitting here watching the tribute to Jimmy Carter. The market's closed today, so no trading today. So what a perfect time to make this video. Hope everyone's off to a good start in 2025. I know my year's been great so far. A little bit of snow here in Baltimore, and it's clearing up, but it is really, really chilly here. So anyway, I'm going to get started with today's topic, predictions for 2025. You can take it with a grain of salt. Everyone's got a prediction, but I've done some research, and I just want to share that with you guys to help you maybe navigate what you do in 2025. I know everyone's saying you got to thrive in 2025, so I'll keep it going, right? Hope you thrive in 2025. So let me just share my screen and give it a quick 10-minute presentation, and then I'm looking forward to getting your comments in the chat. All right, so you guys know me already. If you don't, I'm Coach Mike, founder of Walk On Consultants. I started this on Meetup. We've got about 358 members right now that tune in the first Tuesday of every single month at 7 p.m. for our group workshops. And then I go ahead and record them and put them on YouTube in case you missed the workshop. So, like I said, I'm your founder and CEO of Walk On Consultants, and I am basically a personal trainer for finance instead of for fitness. I help new investors get off the bench and get in the game, doing things like giving them an annual portfolio review and just pretty much being a coach for new and intermediate investors. I always start off the same way with a quote from Benjamin Franklin that an investment in knowledge pays the best interest. Thank you, Benjamin Franklin. I have used that so many times and I will always use it. That's what I'm about. I just want to make sure that we understand that this is not investment advice. One of those reasons is that because a true investment advice knows a little bit more about the person they're speaking to, like your time horizon, why you're investing, what type of investor you are. So today's presentation is really for education and information. It is not to give you investment advice. You understand that, I hope you understand that there is an intersection between risk and reward. And how much risk and how much reward you're going to receive is a decision that only you can make. The one thing I will say, I don't give guarantees, and anyone that does, you should run away from that if they're giving guarantees. But the one guarantee I will say that if you stay on the sidelines and don't take any risk, you won't get any reward. This is a game that you got to be in it to win it, right? If you sit on the sidelines, guarantee no risk, no reward. Lastly, from time to time, I do my research, so you will see me using some links from third parties. That is not my original information. So without further ado, let's talk about 2025, the Bulls versus the Bears. What's going to happen? Nobody really knows. We don't have a crystal ball. So the best thing we can do is use the past as a guide to try to predict the future. So last year, we had a great year. In fact, in the last 2 years were great years. Over 20% returns each year. That doesn't happen too often. The last time that happened was back in the 90s. So can the markets three-peat the way the Bulls did in the 90s, right? That's the question. So done a little bit of research, well, at least research from somebody else who did research, right? Jessica Rave is who I'm getting this information from at DataTrek. And she says that when the market rises 2 years in a row, 71% of the time it's going to rise again for an average of 9.4%. But when it rises 20% or more, like it has done just now, it again goes up 2/3 of the time, but only an average of 7%. So either way, we're probably going to have a good year, 7%, maybe 9%, not another 20% year. That's probably not going to happen. Okay. It can, but it's probably not going to happen. So I'll take 7% on top of 20% and 20%. Absolutely. One more part to the article that I read is that earnings growth for companies are expected to be in a range of 15%. So when if companies have good 15% earnings growth, then that should translate into, again, gains in the stock market. Some of the areas, some of the sectors that are looked at, information technology, of course, it's always one of the sectors, right? Healthcare, which I agree with because it didn't do so well in 2024. Industrials, materials, and communication services. So one of the things that we cannot ignore is a change in leadership, which will happen on the 20th, right? And we know that these two presidents have definitely opposing styles. So there's going to be definitely a change in philosophy and strategy, right? So I've got to talk about these subjects here. The Republicans will now control the House, the Senate, and the presidency. So whatever bills and ideas they want to get through, they're going to get through. They have a slim majority, but they're going to get those through. We all know that Trump is pro-business, so whatever is good for businesses is going to be on the table and trying to get approved, right? Doesn't matter if it's good for the people. He just said that to get elected, right? He doesn't care about the people. It's what's good for business. And the idea, I get it. The idea is that if it's good for business, it will trickle down to the people. But in theory, that works. In reality, it doesn't happen, okay? So we're going to see lower corporate taxes, absolutely. We're going to see more M&A. He's not going to shoot down mergers because it's going to create a monopoly. Monopolies are a bad thing because that raises prices and it's bad for consumers, okay? We know he's friendly to crypto, and you saw what happened already. Bitcoin went over 100,000, is back down to maybe like 94, 95 now, but it went up to 108,000. So, okay, that the proof is there. Now, the tariffs things is dangerous because this really is a tax on the foreign companies that are exporting their goods to America. He says he's going to make those countries pay for the tariffs, but that's like saying, oh, I'm going to build a wall and make Mexico pay for it. You know, we see how that worked out, right? I partially agree with the next statement, right? With the Doge, not the Doge coin, right? Him and Elon Musk have this Department of Government Efficiency. And so, yes, the government, federal and state governments waste a lot of money. So, yes, to clean that up makes sense. But what's probably going to happen is people are going to lose their jobs. And because our economy is based on consumer spending, people losing their jobs is not going to translate well for the economy. I'm just saying, okay? Two more points, right? That he has a habit of interfering and overstepping his boundaries. He thinks he's a king. You're president, but you're not king, right? So you cannot interfere with Jerome Powell. It's an independent agency of the government. And the reason I think that's a problem is because the market wants to have certainty. And having uncertainty is going to cause a volatility. So if you're a trader, this may be a good year for traders because there's going to be a lot of volatility because Jerome Powell is probably not going to raise rates cut rates as much as he wants them to cut rates. Maybe once, maybe twice, if any. So that's going to be a problem. And last one, mass deportation. If we really kick out 10 million illegals or how many ever they say it is, right? Who's going to fill those jobs? Those are jobs that Americans don't want. And if they find a way to get Americans in those jobs, they're going to have to pay more money, and which means it's going to cut into profits, or those companies will raise the prices on those goods, again, which will cut consumer spending. Okay, so I'm just throwing out a lot. There's a lot to digest. This is going to be a very, very volatile year, which will, again, at the end of the year, probably end up with a 7% return. My estimate. All right. So where do you look? Where are the opportunities? Of course, AI, quantum computing. I got a feeling that the buzzword for this year is going to be quantum computing. That's just saying. You heard it from me, right? The data centers, of course, because of all the cloud computing, we're going to have to store stuff in data centers, and they draw a lot of energy, which is why one of the utility companies here based in Maryland, Constellation Energy, the parent company of BG&E, did really, really well. Normally, utility companies are just whatever, but they did really well last year because of the energy consumption. So think about solar and, of course, nuclear. Nuclear is seeing a big resurgence in the last couple of months. So I would also look at financials and healthcare because healthcare didn't do so well last year. I think it'll do well this year. And on the technical aspect, I think the home builders are oversold. It is a rate-sensitive industry. I'm not sure if it's going to bounce back, but I think it's oversold. And of course, we cannot forget the president has his own social media company called Truth Social because he was kicked off of X or Twitter, which is now called X. So he has his own company. His ticker symbol is DJT. You can love him, you can hate him, but if you want to make money, maybe you should think about investing in DJT. I'm just saying. All right. Here's some AI stock names. If you want to dig a little bit deeper, do your homework, do your research. I'm just providing food for thought. I'm not recommending any of these stocks. I'm just giving you some food for thought if you're looking at some AI names. And of course, I said healthcare, and then what I'm to dig down a little bit deeper, the pharmaceutical stocks. I just learned of a new ETF, PPH, ETF for pharmaceutical companies. I need a sip of water, right? And I mentioned the housing stocks. So I think this sector is overbought, oversold. So take a look at XHB. That is the ticker symbol for the ETF of the home builders. I think that group's oversold. Lastly, whatever you do, please make sure that your portfolio is well diversified. Don't go all into AI. Don't go all into pharmaceuticals. Don't go all into the home builders. Please diversify your portfolio. Okay, that's all I'm saying. You got to diversify. You can't put all your eggs in one basket. You know that. I say that every time I'm on here, just like I say the Benjamin Franklin quote, right? Um, and of course, this is a time that we are doing our annual checkups with our doctors. I'm your stock doctor. So schedule an annual portfolio checkup with me. We can go through each one of your stocks one by one and figure out why you bought that stock. Should you hold it? Should you buy more? Should you get rid of it? Let's talk about your portfolio. Let's do an annual checkup for your portfolio. I want to say that learning is a journey. It is not a destination. If I can still learn new things after 30 years in the investment world, you can certainly learn new things. Never stop learning. I'm a lifelong learner, and I'm trying to encourage you to do the same. So this is it. Coach Mike signing off. Thank you guys for listening. I'm looking forward to your comments. Please like and subscribe to my channel. This is Coach Mike signing off. Let me hit the stop record button. Yes.